Hello, everyone. Welcome to yet another episode on Stockertim. Welcome to Stockertim Special. On this episode, I'll be talking about the return of the SPAC King. Yes, Chamath Palihapitiya, who is best known as the SPAC King, is now back on Wall Street to list yet another SPAC called the American Exceptionalism Acquisition Corporation, which will be listing on the New York Stock Exchange under the ticker symbol AEXA. So Chamath is coming to the market after several years when a lot of retail investors and established investors actually lost a lot of money to his SPACs. He's coming with yet another SPAC that is also promising something a bit different, but at the end of the day, it is yet to be seen whether this is yet quote and unquote another rock pull or investors are going to actually not regret this. But before I get into that, any information we share on this channel is for education and information purpose only. Do your due diligence or consult your financial advisor before making any decision. On that note, please give this video a like, subscribe to the channel, put on your notification bell so that you don't miss any updates. So let's jump right in. So before we actually go to the details of actually the details of the new spark by Chamath, just as an introduction for most of us who don't actually know Chamath, he was a former Facebook executive who actually turned to be a venture capitalist. He emerged in 2020 to 2021 during the spark boom. He actually came up with several SPACs. He raised, billions of dollars under the SPACs and under the social capital Edosofia brand. That actually earned him the SPAC King. He earned that name as the SPAC King. His idea then was that he wanted to actually democratize access to high growth tech companies, or, for retail investors, for everyday person who couldn't actually get access to, invest in these companies through, the private market to actually get access to them. And the easiest way was to actually create a SPAC, which is like a blank check company that doesn't actually do anything, and that company will look for an actual company in the real world operating privately, and they bring them on board to actually become a public company. And around that period, one of his most popular SPAC that he brought forward actually merged with Virgin Galactic. Virgin Galactic actually failed at the end of the day. The company actually struggled, a lot of delays. They couldn't actually even get the journeys that they actually wanted to do. They couldn't go get it started, to go into space tourism and all that. And that was the end of it. Billions of dollars lost to Virgin Galactic. He also brought Clover Health, which was supposed to be a disruptor in healthcare, but they faced serious short selling, regulatory problems, and the stock actually collapsed. Open Door, which is still very very popular but not successful as a stock for investors. Open Door actually crashed by more than 90%. Even when there's a huge momentum and a whole lot of speculation around Open Door. Open Door is now actually trading at around $4 per share when during the boom Open Door was over $30 per share. SoFi Technologies, which to his credit is one of his success stories. SoFi Technologies is actually a fintech company that is offering investment, offering a whole lot of financial product to everyday person. Student loans. They offer stock trading. They offer crypto trading and all that. But over the years, SoFi Technologies actually struggle, and at the end of the day, the stock is now up by over 100% since it was listed around 2001, and that is actually the only success story that Chamath has to actually show out of the 10 sparks that he actually listed under the social capital at the Sophia brand that he actually floated around that time. So that's Chamath. Now, coming to what is actually bringing on board this time around, which is the American Exceptionalism Acquisition Corporation, is also going to be something that the market is actually going to watch with close scrutiny. Why? Because it's not just about investors actually losing money that is the problem. It's about the credibility of SPACs generally. Apart from Chamath, several other SPACs actually came into the market to list different companies, different ideas, different opportunities into the market. And at the end of the day, when the veil was actually lifted, the company started reporting. Came out it actually came out that most of these companies don't actually have anything to offer to investors or to even offer to the market in the first place. So I'm going to go through what exactly is the American Exceptionalism Acquisition Corporation all about, whether you should actually be investing or even consider to even invest, or you even need to actually ignore it totally. So if you have watched this video to this point, give this video a like, subscribe to this channel, and we'll always bring you much more ideas to actually rejig your investment opportunity and horizon. So, according to Chamath, the American Exceptionalism Acquisition Corporation will be targeting, artificial intelligence, decentralized finance companies into robotics or energy. So, basically, Chamath is just going out there to actually shop for companies that it can actually match this SPAC with. And according to him, there is going to be a bit more stricter alignment to actually make sure that investors actually benefit and investors are not really ripped off. According to him, there will be no warrants, and sponsor shares will only vest if the stock actually rise above 50% of its listing price, which is $10 per share. So, to an extent, it might actually be that, okay, is Chamath actually using this opportunity to redeem his image? Does he actually have a company in sight already? Is this going to be any different from what is done before or what anyone has done before in the SPAC business of listing companies or bringing companies to the market under SPACs? So let's go to the first condition that is actually given, that there will be no warrants. So what exactly is the idea that there will be no warrants? So normally SPACs, anyone who buys into SPACs will get a warrant. So SPAC, a warrant is actually is actually an option to buy more shares at a fixed price. So at the end of the day, even if the stock actually goes above that price, when you actually want to exercise the warrant, you will only buy it at that fixed price, so which will be about $11.50. So let's say the stock price goes to $30 per share, you will only buy it at that price, which is a huge gain. Warrants actually give investors, it's like a lottery ticket. So at the end of the day, you bought something at you are buying something at $11.50, but the stock is now $30 per share. And at the end of the day, the disadvantage with warrants is that it actually dilutes investors. It makes existing new investors to actually lose value on their stocks. Now that is actually going to take off the warrant off the table, would this actually get more people to give him the attention, more investors to pay more attention to actually buying a stake in this SPAC? It's yet to be seen. For me, I still want to actually see more. I don't even recommend SPACs to anyone, especially going by past experience, going by the nature of SPACs and the fact that most SPACs are not actually as transparent as required by IPOs or direct listing. Also, the second condition is that sponsors shares will only vest if the stock actually rise above 50% of the IPO price. So what that means is the sponsors of this SPAC, like Chamath and any other big institutional investor or any other sponsor that is joining him on this deal, they will not get anything unless that stock actually rise above 50% of the listing price. So does this actually mean Chamath is actually coming up with something that is going to be more beneficial? But the idea why SPACs actually fail is not necessarily because they're SPAC. It's because many of these companies are companies that are not even going to survive the next 2 to 3 years in their life cycle. Many of them don't even have, a proven business model, a proven path to even being profitable. So at the end of the day, even if the SPAC is actually better or well constituted, it's actually designed to actually attract the right set of investors, the greed aspect of people actually getting access to warrants, vesting shares and selling them at any given price or getting a cut of the entire money raised. Even if all of those things are taken off the table, a SPAC is still a SPAC. A company that actually comes through a SPAC has less scrutiny, less less disclosure, and less opportunity for investors to actually see what is actually going under the radar, what is actually behind the veil. I'll show you a chart and we'll close on that note for you to actually see why many people are actually afraid of SPACs and why many investors are staying away from SPACs. So here is the chart for all the four major SPACs that Chamath actually brought to the market. You can see Clover Health is down today. Is down all time by 75 percent. Virgin Galactic is down by 98%. Open Door Technologies is down by 66%. The only more or less success story out of all the 10 SPACs that I brought to the market, and out of the 4 SPACs that to an extent are still existing in the market, the only success story is SoFi Technologies, which is a fintech company that actually offers investment, trading, and loans. Also they also offer some banking services. But at the end of the day, you can actually see the fact that when the SPACs actually list for the first few months, they go very, very high into the sky because investors haven't seen anything about these companies. They've not seen the financials, they've not seen any quarterly update, anything that has to do with the actual financials, fundamentals of the business has not been made public. And at the end of the day, when the information starts coming out, when these companies start doing their first quarter, second quarter, third quarter, full year results, you actually see that these companies are very, very fundamentally weak. They have nothing to actually offer in the market, let alone an average investor. Now, does that mean the likes of SoFi being an exception? We're going to have that. We will have that when there's more scrutiny on the companies that actually merge with the SPAC. The SPAC to me is not actually the problem. The problem is actually the companies, the quality of the companies, the kind of people around the company, the idea, the business model of those companies actually needs to be more scrutinized. So if American Exceptionalism Acquisition Company is not going to actually offer much more disclosure about the company that they will be listing, whether it's in AI, defense, whether it's in crypto or decentralized finance, I will actually as an opinion that investors should be very, very wary of, going near this SPAC in the first place, because at the end of the day, you could actually see, as a matter of fact, it took SoFi several years of, almost zero return for investors before until this year SoFi actually started showing something worthwhile. So at the end of the day, should you be investing in American Exceptionalism acquisition SPAC, or should you be staying away? For me, I actually want to see much more information. I'm yet to be convinced that SPACs actually have something special or something very fundamental to offer me as an investor. So that's why I think. What do you think? Drop in the comment section below. We will also invite everyone to join our community where we share much more ideas about opportunities to invest in. We bring that intellectual approach to investing, intellectual and much more fundamental approach to investing. So it's not just we telling you what to invest in, it's about that academic rigor, the research, the due diligence that you actually need to do before you actually go for any companies to actually even pick and build a portfolio. So I'll drop the link to also join that in the description of this video. Thank you so much for watching this episode. Till next time, keep investing, keep growing.